Hello everyone. Today my presentation on IFRS 5. IFRS 5 deal with non-current assets and disposal groups that an entity plans to sell instead of continuing to use in its operation. An asset is classified as held for sale when its carrying amount is expected to be recovered mainly through a sale transaction rather than through ongoing use. The objective of IFRS 5 is to ensure that once such a decision is made, the asset is measured appropriately and presented separately in the financial statements. Specifically, the standard requires assets held for sale to be measured at the lower of their carrying amount and fair value less cost to sales. And it also stops depreciation because the asset is no longer generating value through use. By requiring separate presentation, IFRS 5 improves the relevancy, transparency, and comparability of financial statements, allowing users to clearly distinguish between continuing operation and assets that are expected to be disposed of. This slide explains what IFRS 5 applies to. The standard covers non-current assets that are classified as held for sale, meaning the entity plans to recover their value through selling them rather than continuing to use them. It applies also to disposal groups, which are groups of assets sold together along with any directly related liabilities. In addition, IFRS 5 applies to discontinued operations, which are parts of the business that have been disposed of or are held for sale. This slide highlights the items that are excluded from IFRS 5. Certain assets such as deferred tax assets, employee benefit assets, financial assets, investment property measured at fair value, and biological assets are not covered by IFRS 5. This is because these items are already governed by specific IFRS standards that have their own recognition and measurement rules. For an asset to be classified as held for sale, management must be committed to plan to sell it. The asset should be available for immediate sale. The sale must be highly probable and it should normally be completed within 12 months. This condition ensures that the sale is realistic and not just an intention. An asset is classified as held for sale. It is measured at the lower of its carrying amount and fair value less cost to sell. From this point onward, depreciation stops because the asset is no longer being used. Any reduction in value is recognized as an impairment loss in profit or loss. 5 require asset held for sale to be presented separately on the statement of financial positions. If the asset is a part of a disposal group, related liabilities are also shown separately. This separate presentation helps user clearly distinguish continuing operation from asset that will be sold. In this example, we are giving the carrying amount of the machinery, its fair value, and the cost to sell. The asset is expected to be sold within 6 months, which meets the IFRS 5 criteria for classification as held for sale. In this slide, we calculate the measurement of the asset under IFRS 5. The first step is to determine the fair value less cost to sell. This is done by taking the fair value of the asset and deducting the expected cost directly attributed to the sale. In our example, the fair value is 4,70,000 and the cost to sell are 20,000. So the fair value less cost to sell is 4,50,000. Next, we compare this amount with the carrying amount of the asset, which is 5 lakh. IFRS 5 requires the asset to be measured at the lower of these two amounts since 4,50,000 is lower than 5 lakh. The asset must be written down to 4,50,000. The difference of 50,000 represents an impairment loss which will be recognized in profit or loss. As a result, the asset is measured at fair value less cost to sell, and the difference is recognized as an impairment loss in profit or loss. Depreciation stops from the classification date and the asset is shown separately in the financial statements, improving clarity for users. To conclude, IFRS 5 focus on non-current assets and disposal groups that are expected to be recovered through sale rather than through continuing use. Once an asset meets the held for sale criteria, it is measured at the lower of its carrying amount and fair value less cost to sell. Depreciation stops and by and any resulting impairment is recognized in profit or loss. The standard also requires separately presentation in the financial statements, which help user clearly distinguish between continuing operation and assets that are to be disposed of. Overall, 5 Overall, IFRS 5 improves transparency, comparability, and decision usefulness of financial information.